everyone, and welcome to another of the video series that Chartered Accountants Australia and New Zealand are doing to help members in New Zealand understand some of the implication of the current COVID-19 impact. Today, I'm joined by Kare Johnstone, a partner of McGrath Nicol, a leading advisory and restructuring firm in Australasia, an accredited insolvency practitioner, and Kare is also on the board of RITANZ and INSOL International. Welcome, Kare. So perhaps just to get us started, I thought it might be worth just having a conversation around perhaps some of the impacts that we're seeing of COVID-19 on, I guess, business and I guess sort of the professional community as well in New Zealand.
Sure. Thanks very much, Karen, for your introduction and the opportunity to speak to you and the CANS members. This is unprecedented times. It's really challenging times for everybody. Our borders are closed to foreigners, and the world is in lockdown in varying forms. No matter how much preparation we tried to do and businesses have tried to do, we just have not been prepared for this. And the level 4 lockdown has had obviously an immediate cash flow shutdown for all of the businesses or the non-essential businesses where they have had to cease the trading effectively within 48 hours. It's good to see that the government has responded with some of the financial packages and the support that I understand that the banks are giving businesses, but my real concern is around, is this going to be enough? How long is lockdown going to be for? The Prime Minister was very clear in her words that with a minimum of 4 weeks. So we'll be talking 4 weeks, 6 weeks, or 8 to 12 weeks. The other challenge that businesses need to look at is, what does the new norm look like when we come out of the lockdown period? So we're speaking to businesses and saying you really should be assuming a worst case scenario of a lockdown of, say, 8 to even 12 weeks. What does that mean for your business? But also when we come out of a lockdown period, what is that going to look like? We're going to have a new norm. We all are going to start thinking differently, doing differently. How's social distancing going to look when we go out for our coffees, for our dinners, when we drop our kids off at school? It's going to take us a long time to get out of this. I think the best thing, though, as Kiwis, we do pull together in challenging times and we support each other, not only on a personal level, but on a business level. And it's important we do that during this time. Companies need to speak with their key stakeholders. That's really important in these times. Your employees, your customers, your suppliers, keep connected, tell each other what you're going through, what are your plans, how are you going to come out of this, and then how are you going to manage the business when we do come out of the lockdown period.
And now, I guess just expanding on that, what are some of the I guess impacts and implications of COVID-19 on business operations? I know you mentioned sort of cash flow earlier, but what would be some of the other sort of implications, and how is it impacting businesses, I guess, differently?
Okay, Karen, businesses will be affected in various ways and many different ways. Those essential business will be seeing this as a positive impact on their business, and those on the non-essential businesses will obviously be having an immediate impact. And this is hitting their bottom line and their cash immediately following the lockdown period. And I do believe it's going to take a long time for these businesses in New Zealand and the economy to recover. What we're suggesting is business owners to do a 13-week short-term cash flow forecast and also a 1 to 2 year forecast profitability to assess what your business will look like, not only during the lockdown period, but also when we come out of the lockdown period. And you'll have to do a couple of scenario analysis in those forecasts. One would be, let's assume the lockdown period goes longer than 4 weeks. I've already suggested look at that for 8 to 12 weeks. What does that look like on your business? How sustainable will your business be at the end of that lockdown period? Then also looking longer term is, what will the business look like when you come out at the other end? My view, and this is only my view, is that it will unfortunately take us a long time to recover out of this lockdown, even if it is only for a 4-week period. Businesses have been hit, and they've been hit hard. And as I mentioned before, we as New Zealanders individuals, we are going to respond and come out of this thinking differently, and there will be a new norm. So I would model that in the various assumptions and what that might look like. Are your debtors going to be paying you, or will those companies go into liquidation? What is your new norm going to look like? It's going to be a slow, gradual process coming out the other end when we're out, come out of through lockdown. So what does that look like? Will your sales be down 30, even more than 30%? Is that going to be the new norm going forward? So these are all things that business owners and directors need to be asking themselves, and they need to be putting that into a financial model to assess what that looks like on the business.
Thank you, Kare. And I guess just expanding on that, you mentioned liquidation there. When is a company insolvent, and why is it sort of important to determine insolvency versus solvency within a business?
It is very important to know whether your company can sustain COVID-19 and the shutdown period and coming out the other end. Trading while insolvent does put obligations on or implications on a director, where they could be operating in breach of the Companies Act. However, on Friday, the government announced some new changes to the Companies Act in relation to directors while they're considering whether they should continue to trade in the next 6 months.
Thank you. And I guess just expanding on those, you mentioned obviously the temporary changes that have just been announced, and obviously whilst I think the legislation is still pending, it's expected to be backdated to Friday the 3rd of April. But what do some of those changes actually mean for business, and what have they put in place?
So what the government is looking to doing is changing the insolvency aspects of the Companies Act, and this is to help be more flexible and to relieve directors of certain obligations under the Companies Act, and more specifically around Section 135 and 136 of the Companies Act, which effectively talk around a duty and obligation of directors to ensure that they do not enable the company to be carried on in a manner that creates substantial risk or loss to other creditors, and also for the company not to incurring an obligation where they believe at that time that they will not be reasonably able to repay that obligation. So the new changes are looking to alleviate the directors from those obligations for the next 6 months, and that there are some things that the directors need to look at, important, that they need to be acting in good faith. So if you don't think your company will be able to come out at the other end in 6 months' time off the back of this, it's difficult to say at this point in time because the laws haven't yet been introduced. But the question is, well, will you still be liable if you've gone through this period actually knowing that you are never going to come out the other end within that 6 months? The other obligations or conditions are that the company needed to be solvent and needed to be able to pay those debts as they fell due on the 31st of December 2019. And they need to ensure that although they're continuing to trade during the next 6 month period, is that they believe in good faith that they will be able to pay those debts in the next 18 months. The other changes that have been brought in is what's referred to as a business debt hibernation. And what that is allowing companies to do is enter into a temporary agreement with their creditors, which will place a moratorium on the company to pay debts and also for creditors to enforce debt. And that will be the company will be able to put forward a proposal to creditors, and creditors will be able to vote on that proposal, both on a 50% on value and a 50% on number of creditors, whether they support the proposal that's being put forward to them. And effectively what they will do is that will give creditors a breathing space of 6 months, or the company rather, sorry, a breathing space of 6 months, in which to give them time to work through potentially a creditor's compromise or any other forms of a restructuring at the end of that 6 month moratorium period.
Thank you. And I guess that's one of the options that's available to a business now in terms of who is in financial distress. Other sort of options available for businesses now who are in this sort of situation, and what should they be doing?
There's plenty of options available for businesses, and I would encourage businesses to seek expert advice as they can, and sooner rather than later, so that they can help prepare for the COVID-19 shutdown period and coming out the other end. There is the hibernation that I've just talked about. There's also informal restructuring, which is where you'll be liaising with your key stakeholders to see whether you can renegotiate some of your supply terms. You may be able to enter into a creditors compromise, which I've touched on. That is a more formal process, which is done under the Companies Act. And that would be effectively where you'd put forward a proposal to creditors to vote on, and would often include a form of a debt reduction where there's not 100 cents in the dollar paid for creditors. But the benefit of that is where the creditors may take a bit of pain now, but then they've got their customers still in business and still in operations. And so that's a success story for all parties. Failing that, you could move into a voluntary administration where the directors could appoint independent voluntary administrators. Again, that could be worked through a deed of company arrangement, and that's a proposal again for creditors to vote on. And failing that, a company may ask a bank or one of their secured lenders to appoint a receiver, or they could go into a liquidation. I think it's important to note, when companies are looking at the various restructuring tools available to them, is that they don't have a knee-jerk reaction during these challenging times. We've already seen multiple losses, job losses around the world and obviously in New Zealand. And it's important that before anyone makes a decision in what they should be doing for their business, is they take the time, take stock, look at their financial information. The financial information needs to be robust, and it needs to be good quality in order for you to make good quality and measured decisions.
Thank you. So I think the key thing there is take your time to make the right kind of choices, but equally the sooner that you do seek some advice, then the more options that you will probably have available to you as an organisation for finding your way out of this. And where can chartered accountants go to find sort of the high quality advice? Because I know there are some concerns in the sector around probably untrustworthy pre-insolvency advice, and that's certainly something that our members need to be mindful of if they're looking to help their clients or if they're working in a business themselves. So where could they find good quality advice?
Sure. I recommend clients look to appoint accredited insolvency practitioners. They are experts in the restructuring space and the insolvency space. And they've also gone through a formal mechanism to enable them to be accredited insolvency practitioners. There's a list of those practitioners is on the RITANZ website, which is ritanz.org.nz.
Great, thank you. And obviously we're aware that the insolvency practitioners are in the process of being regulated in New Zealand, but that in the interim, certainly the accredited insolvency practitioners, which is jointly between Chartered Accountants Australia, New Zealand and RITANZ, is definitely going to be the best point of call. So thank you. And was there anything else that you think might be useful for our members in these current times?
I think the important thing is to remember we're all in it together and to seek help. This is unprecedented times, so we're all going through this the first time together, so we should be all holding hands, seeking advice when we can, and keep safe.
Thank you, and thank you very much for your time today. It's much appreciated. Thank you.